A surprisingly hawkish pivot by the US Federal Reserve, along with the European Central Bank and Bank of England, crushed global equities towards the end of the previous week. All three banks raised their benchmark interest rates by 50 basis points each and warned of forceful monetary policy response in 2023. Among the lot, Fed announced that it saw benchmark rate peaking higher than expected at 5.1% next year. It also suggested that inflation may remain stubbornly above its 2% target till the end of 2024, thus ruling out any hopes of rate cuts until then. The spillover effect hit India as well, with the benchmark S&P BSE index cumulatively sinking over 1300 points during last Thursday's and Friday's session. For the week, the Sensex ended 844 points lower at 61,338. The NSE Nifty 50, meanwhile, tanked 1.2% to 18,269. In the broader markets, the BSE mid-cap and small-cap were down by up to 1.4%. Going into this week, analysts expect markets to consolidate further and track global cues amid no domestic events. Navin Kulkarni of Axis Securities, for instance, predicts a limited upside in equities this week on the back of stretched valuation.
The market has seen some correction in the last 2 days after the actions by the Federal Reserve, which essentially talked about interest rates and inflation challenges persisting. This will have an impact in the forthcoming weeks. Market valuations for India are not cheap. The inflation continues to persist globally. There has been some decline in inflation, but it is still reasonably high. Apart from this, market valuations have also moved up, which provides little comfort from current levels. So, taking this into consideration, we expect the market to remain range bound for some time, and more importantly, in the next week, there could be some corrective actions.
Technical charts too are flashing warning signs. The frontline indices have dipped below their short-term moving averages, with the 30-pack index eyeing over 3,000 points downside if it breaches key support levels.
For Sensex, SMA 21 was at 62 to 285, and for Nifty it was at 18,525. Both the indices have broken this key level, and any consecutive close here on would mean there is a selling pressure, or market could see a sideways trend wherein all the efforts will be made to absorb all the selling pressure arising at higher levels. The next support for Sensex is at 61,000, and for Nifty it comes to 18,100 level. Only upon breaking these support marks, Sensex and Nifty can see further downside to 58,000 for Sensex and 17,700 for Nifty. In terms of Bank Nifty, simple moving average 21 comes to 43,190, and only breaking this support mark, it can further slide to 42,500 to 42,700 levels.
That said, any positive news flow may trigger up move towards the immediate resistance zones. These are 62,285 for Sensex and 18,525 for Nifty. On Monday, market participants will focus on primary market activity. The 15,000 crore rupees IPO of KFin Technologies will open for subscription today and close on Wednesday. The price band of the offer is fixed at 347 to 366 rupees.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.